Hello and welcome to BloombergQuint. On IPO Adda today is the management of Zomato Limited. Zomato is coming out with an IPO which opens on July 14th. The company has priced its shares between 72 to 76 rupees, giving it a market cap of nearly $8 billion at the upper end of the price band. Joining me today is Gaurav Gupta, co-founder and chief supply officer at Zomato. Gaurav, welcome to BloombergQuint. Let me begin with asking you, you are a unique tech platform. Uh, Explain us how you recognize your revenues and what kind of cost structures you have.
So I can tell you what we're building. We're actually building a food ecosystem where we connect users and customers to restaurants for whatever they need. They can actually order food at home. They can go to the restaurants and dine out. In fact, for restaurants, we provide them with orders. We provide them with diners. We also provide them with raw materials. So these are the three core parts of our food business that is core to us, and that's what we're building. And the operating model and the monetization model in each of these is different.
So, what kind of revenue recognitions you do? What are the items that bring in the revenue for you?
I think all of those details we have included in the RHP, and you can refer to that for anything that you're looking for there.
Okay, so we saw in the RHP that the contribution has for the FY21 is 20 odd rupees, 20.5. Can you give us an idea of when you look at the contribution, what is exactly it? Is it a revenue for you per user, and then you do the P&L, which includes other costs? How does it map to the P&L of a company?
So we have actually shared the unit contribution and the unit economics with you. And of course, there are more costs that come after that. There are some fixed costs and other costs that come after that. You can find, again, all those details in the RHP.
Give me a perspective on the pricing as well. 76 rupees. Your last fundraising in February this year was around at 55 odd. You've taken a 36% jump on that valuation, giving it a $8 billion valuation. How did you arrive at that pricing?
So valuation for any company is arrived at what the current strength of the business is and what the future potential of the business is. I think that's what the whole banking community, the investors who are coming in actually have taken into consideration to arrive at this pricing.
So you're saying that your business potential has risen from $5.5 billion in February when the last round happened of $250 million to $8 billion in the span of 3 to 4 months?
As I said, it is about the strength of the business today and the future potential. And I can tell you that if you even look at the last 5 years and I think how we move, I think it's a very dynamic space. There's so much opportunity in front of us that we're building. So things move pretty fast.
Okay. My colleague Nishant is also joining us from Delhi. So Nishant.
Gaurav, great to have with us today. Want to also get a sense of you talk about the future opportunities as well. Grocery is one space that you have started to again expand. I saw a line in the prospectus as well where you're mentioning about you're looking to do a pilot as well. Now, grocery is something you dabbled during the pandemic, but closed it down. You're making also investment in growers. What's happening there? Is it a new business important line coming out for you going ahead and will be important revenue drivers and is also a hot competitive market space?
So again, food is very core to us. And we've done multiple things in food for restaurants, right? So for example, whether it's food delivery, whether it's dining out, and our raw material business, which is hyperpure. So that continues to be our focus. Grocery is something new for us. So yes, we are actually going to launch a marketplace model on Zomato for grocery. We did it last year as a response to COVID to help out customers. We took a break from that. And now we are actually relaunching grocery and we'll see how it goes. It's one of the new things that we're trying. And I think at this point, I would say it's an experiment for us. And we will see how we scale this as we learn more in this space.
But what changed? I mean, you tried, you shut it down, you're doing it again. What was the thinking? What is the thinking went behind that? You have to do something like that. And it is important to you.
So I think the external context of how online grocery is playing out has changed as well. And we understand that. As I said, last time when we did it, it was to actually help out customers because at that time, people were not looking for food delivery. Our customers were looking for grocery coming at home. And we enabled that quickly given the network that we had. And once food delivery came back up again, we actually, of course, went back to focus on food delivery. And now we understand grocery is an important part of a hyper-local service that we can provide to our customers. And that's where we're getting back in.
And losses is something which everyone will be watching out for. The way we have seen how that's played out in global food tech company IPOs as well. Uh, Although you have been able to trim down your losses between FY20 FY21, how do you think how big that as a challenge is going for you, and what is the roadmap? Because you are in a high growth, high competitive area, you'll be investing money.
So, Nishant, the way we see this is there are existing businesses and parts of business will become mature, and they, of course, have to be better in unit economics. And there are new parts of business or new opportunities that you continue to invest in. I think that's the philosophy we followed till now. And even after listing in the IPO, we'll actually continue to do the right thing for the business and continue to invest behind the right growth opportunities while we make sure the mature part of the business is actually doing well from a unit contribution perspective as well. So we'll optimize for growth and unit economics like we've done earlier as well.
And the
It's
mature
an
part of
add
the
for us.
business being?
Could you repeat that, Nishant? I think there was some
What is that
disturbance.
mature part of the? Is you're saying that food delivery is the mature business right now for you?
So as parts of business is mature, right? So even food delivery, even though you might think it's large today, but there is still a lot of opportunity going forward. But it has become decently sized and scale. So as the mature markets within food delivery pan out, I think you will see the unit economics are turning out differently. While we'll actually get to new customers to come into food delivery, the economics for that will be different. Right? So it's not even at a business level; it's actually a much micro part of the business. It's actually at a zone level, at a customer level, and that's how we see the business.
Uh, you know, uh, got a couple of questions on the sales and marketing front, because on an operation level, once you are getting listed, the street would be looking at more about operation profitability, which is coming in for you. Uh, do you see turning positive on operational level in the coming financial year?
So as I just mentioned, we'll continue to optimize for growth and unit economics. We see existing mature parts of businesses becoming better unit economics and investing behind growth as we go along. And I
Mhm.
can tell you one thing, I think after listing, it's not that nothing would change in our behavior and how we build the business. We'll
Mm.
continue to do the right thing for building the business like we've done earlier. And that's about it.
Okay. So, give me a sense of the sales and advertising expenses, because that has come down drastically in the last financial year. We saw it coming down to from 88 odd percent to 24.8% or something. Uh, is this a sustainable and normalized level of sales and advertising expense going forward? Or, is it because it was a pandemic year, we saw this kind of sharp drop coming in, and it may again go back again?
So whatever you see in our business, that has come over a period of time. So the market has evolved. Customers have understood food delivery much better. Restaurant partners have started operating much better. We've also understood the space much better. So all the movement that you see is actually a moment of evolution of the market and understanding over the last 3 to 4 years, and not necessarily to do anything with the pandemic. And how it'll play out in the future, I think we'll have to see.
So do you see the evolution being very fast in the last financial year because of the pandemic, how systems changed, how people started ordering or consuming food, and that required lesser amount of sales and advertising expenses? And so going forward, it could be the same. It will evolve further instead of going back to the pre-COVID expenses.
So COVID has definitely accelerated a lot of behavior changes, which is good to see. So, for example, food has been a need for a lot of people. Food has also been a sole source of entertainment for a lot of people when people were locked out at homes. But we also need to realize that once you order 3, 4 times, or once you consume 3, 4 times from a restaurant, it becomes habit for you. So some of these habits are here to stay. So I think COVID has definitely accelerated adoption, which is a great thing to see, and that only helped the industry do better going forward.
And your average order size as well. If you look for the FY21, somewhere around 396 versus 278. Um, uh, and I understand a lot of high value is coming from the premium restaurants which are attached to you. Do you see the similar level of average order value coming in going forward as well?
So average order values of what we see today has also been a journey, like everything else, over a period of time. The restaurant industry, of course, has gone through a tough time in the last 1.5 years. The good thing is the food delivery business has actually done well, so they've got good business from that. And we see a lot of good restaurants, even premium restaurants, starting food delivery now, which they were not doing earlier. I think some of those factors are, of course, fundamental to what we see, and we believe that all these are good changes for the industry. That will only actually multiply as we go forward, and the industry will continue to grow.
Nishant?
And on the changes itself, when you talk about premium restaurants doing their own delivery, there is a lot of voice against food aggregators in the country. You see, NRAI is leading the charge where where restaurants are starting their own delivery. Now you're facing competition from a premium restaurant, which is very important for you because that lead to high order values for you. They are charting their own journey with their own delivery units, their own tech backend, and also you're facing a challenge from upcoming Amazon. How do you think these two things will play out simultaneously? And how worried are you in terms of the competition that you're going to face going ahead?
Nishant, what that tells you is that this space is very exciting and there's so much opportunity. That's why there's so much buzz, right? Which is a good thing. Always, order direct always exists as a channel. You could always pick up the phone and order from your favorite restaurant. Restaurants also today are saying that this is one additional channel that they're trying to digitize right now, right? Which is a good thing. They're not saying it's a substitute for platform. And platform like ours drive tremendous and large business to restaurants. And an order direct channel will actually be a small part of that business that they get. And it's fine to have an alternate channel. And we've always enabled restaurants in the past to do better in terms of technology and be able to deliver better customer service. In the future, also wherever we can, we will do that. Our motto is, if the restaurant industry grows, we will grow. Right? So I think that's how we see everything. And as far as competition from other places is concerned, competition is good, keeps you on your toes, forces you to do better. That's what's happened in the industry till now. The industry has done well because of that. And we're very clear that we have to continue to execute well and better, like we have done in the past. That doesn't go away. This is a very long game that we're playing. There's a long opportunity we are building. And we're very committed to actually just making sure that we keep pulling ourselves back up to be running in front of this race.
And on campaigns such as logout campaign, we are also seeing, NRAI doing have put in a request with the CCI against the anti-competitive practices, data masking. How will that weigh in on your prospectus going ahead? And how you aim to solve these?
Nishant, the issues that have been highlighted there are misplaced. Having said that, we continue to work with restaurant partners. In fact, we work with large number of thousands of restaurant partners today for food delivery, for dining, for hyperpure, and we continue to do that. And I think even these issues that have been highlighted, our endeavor is to actually talk, understand the issues, make them understand how to solve for them, and get back to business. All right, and I think that's the endeavor. And to be honest, in like partnership, in friendship, there are some times where you have fights, right? That's part of life. It's not all rosy at all points in time. So I think we will treat it like that, and we will make sure that we continue to work together.
I think all that is part of the competitive landscape which is coming in. But my question here is on commissions and customer delivery charges, because that's the biggest revenue earner for you in your unit economics. We saw a sharp jump happening in that from 43.6 to 62.8. What kind of headroom you have to increase those commissions and delivery charge, which is now at 27? How much further you can increase it, given the fact that it is becoming a hyper competitive market for you?
We fundamentally believe that the ecosystem has to be sustainable, and the ecosystem has to do well for us to be able to do what we have to do. And I say ecosystem, I mean restaurant partners, I mean delivery partners, and I mean our customers. That's the philosophy we've taken so far, and that is the philosophy we'll take going forward.
So, is there a headroom or not?
I cannot comment on that right now, sir.
But do you see these two evolving over a period of time as users will pay more for those things?
The business has to evolve. Everything will evolve. Very difficult to predict what will happen, but yeah, of course, things will have to evolve.
Okay. Your contribution also as percentage of gross order value, it's around 4.1% as per your RHP. It has slightly fallen from Q3 to Q4. Any reason why it is that way? Because from Q1 it was 6.5%. Now it's at 4.1% at the end of Q4.
So as I said, our business is a mix of existing mature parts of the businesses, and it's also a mix of new opportunities which we find in existing businesses or new things. As we actually get more new users into the fold, and we actually try to grow the category coverage, it actually impacts what contribution margin mix we look at, and that's what's happening here. We're getting many more new users to try food delivery even now. And when you get them to try in the beginning, of course, the unit economics are different, and that's the impact that you see there.
Can you give us a sense of what's happening in your overseas ventures? Because you have a lot of overseas venture, and if you look at the losses, nearly 40-45% are coming from the overseas ventures which are there. Uh, can you give us an idea of how these ventures are proceeding, and do they require further capital infusion in the next couple of years so that they also mature to what the India business is?
So we're very focused on India as an opportunity, and a lot of mind share for us goes there. We believe there's so much to do in India, and that's how we're building our business.
And how does the overseas venture work on it? I mean, does it is there a separate team which works on it? How is it? Because in a consolidated overseas ventures also come in, right?
So most of our international locations have only the review, search, and discovery platform that we run remotely, in most cases.
Hmm.
Does that mean you're gonna put less focus on the international market and eventually consolidate everything and only focus on India market? What is your international vision? Because you have been consolidating, cutting down on countries. You mentioned the perspective India is a key market. So is international happening for you or it's not?
At this point, we're very focused on India, and that's the main part of our business and our focus.
Okay. And also average monthly transacting users. That seems to have also monthly average users, transacting users have seems to be come down between 2020 and 21. You would like to believe that with pandemic, people stay at home. They might be ordering more, a lot more. What's been the trend like there, and how is that quarterly moved?
In the first wave of COVID, when that happened, it was of course very scary. There's a lot of fear of surface transmission, and people resorted in India to what is most convenient, which is home cooked food, to just keep themselves safe. That happened in the first wave of COVID. But as we've realized that there's no surface transmission and food delivery is safe, we've delivered crores of orders in the last 1.5 years. Not even a single case of transmission. I think once that belief has come back, I think we've seen, as you can see in our numbers as well for Q3, Q4 last year, how people have started ordering food. And now that, for example, the COVID lockdowns are easing, people are also actually going and dining out. So I think the first wave of COVID, of course, was different. And after that, we've seen the growth and the business come back because people have understood that there's no fear of surface transmission as such.
And just want to get you, that'll be my last question as well. Get your thinking behind going for an IPO during a pandemic. Was it always been the plan that this is the year we were looking at, or in a way, COVID sort of pushed your plans? I mean, fast tracked your plans in a way that now is the time we're seeing momentum.
Nishant, we felt that this was a good time for the business to actually go public. And to be honest, when we asked the question, why not, we didn't find a better answer. So,
Gaurav, you're raising 9,000 crores in fresh issue. What is it going to be used? Because you just mentioned that around 6,750 crores would be used for organic and inorganic usage. Can you be a little more specific on that? What kind of, I can understand the organic part of it growing the India business, but inorganic, where are you looking at, or what kind of area you're looking at?
no different plans as of now. I think organic and inorganic are both channels of growth for us. On the organic side, of course, we need to invest in getting more customers to try food delivery, to try food from restaurants. We need to continue to build our delivery capabilities. We need to continue to build on our technology infrastructure that we have. I think that's very clear. And as we go along for existing businesses or new businesses, if we find a suitable inorganic route to grow the business, we'll actually take that call at that point in time.
And from a business point of view, the dining side of the business has been very muted for the last financial year. When you see that picking up, we've seen some bit of restaurants opening up. But what has been your experience in as far as dining is concerned?
Yeah, it's been very tough for the dining industry for the last 1.5 years. And even between the two waves of COVID, when we saw the restaurants opening up a bit, we saw customers going back to that. So we're hopeful that as the lockdown eases up and things become better, that part of the industry also comes back up. And we have a lot of products there that we already have, which we leverage to make sure restaurants can make the most of it and customers can have a great experience when they come back to their favorite restaurants.
Gaurav, we're running out of time. Thank you very much for joining us on BloombergQuint. The IPO of Zomato opens on July 14th, closes on July 16th, with a market value of nearly $8 billion, and the first food tech company to list on the exchanges in July. Thank you very much for joining us on BloombergQuint.
Thank you. The pleasure was all mine. Thank you very much.